Hey there, and welcome to this Saturday, May 4th edition of the Fab Five. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats. And I've got 5 charts I want to go over with you today. 5 companies that reported their earnings last week in 5 different industry groups. I like the charts, and I'll tell you why. But let's jump in. First chart that I have for you is LDOS, and not sure I'm going to get this name right, but Leidos, maybe Leidos Holdings, Leidos, whatever. But I love the chart. Here is a chart that you can see gapped up back in August of last year. Did the same at the end of October. Saw again in February, big gap up. And then again last week, another big gap up, all on increasing volume, all with rising AD line in play. And I'm going to give you the numbers on LDOS. When they reported their earnings last week, their revenues came in at $3.98 billion. Market was expecting $3.80 billion. So clearly a nice beat on the revenues. Earnings per share came in at $2.29. The market was expecting $1.65. So, I mean, we're talking about, 40, 50% beat on earnings. So great report issued by LDOS last week. And like I said, with these gap ups, it provides opportunities. I believe the stock goes higher in time. Just keep in mind that after you get these gap ups, sometimes you will see periods of consolidation. I think it's an opportunity maybe to build a position on any weakness for upcoming quarters. But right now, LDOS has been on fire, and I would consider it one of the best earnings reports I've seen so far in this most recent quarter. So LDOS is stock number 1, and it resides in the industrials area. All right, number 2, and I'm moving on now to consumer discretionary, and this is Garmin, GRMN. Another stock. Look at the gap ups. Gap up in November, gap up again in February, gap up last week. These are really nice looking candles, and they just kind of reek of accumulation to me. Garmin has seen its AD line going up throughout the past year, pulled back during this period of consolidation. And then as soon as earnings come out, we're starting to roll again back to the upside. So things looking really good here. Let's take a look at the numbers. On Garmin, we had revenues come in at $1.38 billion. Anticipated number was $1.24 billion. That was your consensus estimate. So $1.38 billion versus $1.24 billion, clearly a blowout in terms of revenues. And then looking at earnings per share, $1.42 versus $1. That's a 42% earnings per share move above expectation. I mean, these are big beats in terms of revenues and earnings per share. I would be keeping stocks like these on a watch list. And if you get pullbacks, there could be some opportunities to jump in down the road. Here on Garmin, the open from last Wednesday was at about $153. I think anything back down near that level. If we go back, it might be a week, it might be 3 weeks, couple months. But just keep in mind 153. That's going to be a key support level on any selling down the road. So Garmin in that consumer discretionary area is my stock number 2. Let's move on to the financials and PayPal. Now, PayPal looks a little different than the first 2 I've shown you. Not really a whole lot of continuing strength. There hasn't been any consistency in this chart, but this is a stock that's been beaten up for a long time. And I'm going to come back to this daily chart in just a second, but let's pull up the weekly chart. And you can see PayPal, which topped back over $300 a share about 3 years ago, or just under 3 years ago, and had a long, steady decline for about 1 year and continued to push a little bit lower. Things are starting to improve, or at least they seem to be starting to improve for me. So I'm just watching this one closely right now. It may take a while for PayPal to get going, but it does seem like it's putting in a bottom based on what I'm seeing on this chart. It's nice to see the weekly PPO move back up above the 0 line. Hadn't seen that in a long time. So we're getting a little bit of relative strength. How about that 20-week EMA moving through the 50-week SMA? First time we've seen that since we had that bearish death cross all the way back in November of 2021. So it's been about 2.5 years with the 20-day EMA below the 50. And now we've just crossed back up above. I think if we make another push to the upside, that would start to confirm what I believe is a bottom that's already printed here on PayPal. How about the numbers on PayPal? Well, the revenues were expected to come in at 7.70 billion. They came in at 7.50 billion. So 7.7 versus 7.5 billion. Nice beat on the top line. And then on the bottom line, PayPal was expected to come in with $1.20 in earnings. They came in with $1.40. So much better report. Starting to see some of the longer term technical conditions start to maybe change their character from a downtrending, more bearish looking chart to one right now that's starting to turn up. Maybe we call it neutral right now, but things are definitely improving. And if we go back to that daily chart, notice with earnings, we had a double top at about $68. We actually broke above that and opened around $70 last week before pulling back and testing the 20-day moving average. If this breakout that we saw is the start of an uptrend, the pullback throughout the balance of last week, testing that rising 20-day moving average, I think that could be the signal, especially if we bounce back off of this and go back up and break out above 70. That would be a really good technical development and definitely a change in character on the chart of PayPal. Chart number 4, we're going to move on to the medical area. So this is going to be in healthcare. This is LivaNova. I might be mispronouncing this one too. They can't all be PayPal. But LivaNova is what I'm going to go with here. LIVN. And this one had just been going sideways for a while. But then all of a sudden we get this breakout. Look at the AD line soaring. I'm going to pull this up on a weekly chart. We'll come back to the daily in just a second. But you can see this one even go back 5 years has been consolidating. But notice this pullback. Where'd we go on the reaction high? Up near $60. Pulled back to a new low. Where'd we go back? Near $60. Pull back, put in a higher low. Where'd we go back to? About $58. And now it seems like we're holding this rising 20-week moving average. And then look at what happened last week. Big breakout, clearing what had been a significant area of resistance for about the last year and a half. So this one is another one that looks like the character of the chart is changing, turning from maybe bearish or even maybe over the last year or so, maybe more neutral. But that breakout last week does seem to be something that could be getting things started on a more bullish path down the road. Numbers for LivaNova, revenues came in at 294.9 million, not billion, million. And the expectation was 277 million. So we beat probably by about 6% on the top line. And then earnings per share was supposed to come in at 45 cents. It came in at 73 cents, about 60% above what was expected. So that's what triggered that breakout. This could be the start of a much, much bigger move to the upside. Anytime you get these kinds of breakouts, look back to the key area of resistance where we broke out above, because that now becomes support. So I would be looking back down into the low 60s to maybe even the upper 50s as an area where we might see some buying come back in on LivaNova. Going back to that daily chart, though, you can see we opened with earnings just below $60. And when I see that closing near the high and continuing up the next couple of days with the increasing volume, the AD line rising, any pullback back down to that open, which is, like I said, just below $60, that would be an area that would get me interested as a possible entry point into LIVN. The last stock I have for you, we're going to go into technology. Save the technology stock for last. Really liked Itron. I liked it going into earnings, and I liked it even better coming out. We had moved up, had gapped up back in February, went sideways for a while, just consolidating, came out with another earnings report, and this one blew away Wall Street's numbers, and as a result, we saw a nice breakout with increasing volume over here. Clearly, that volume was as strong as just about any we'd seen all year, other than the gap up back at the end of February. So very strong, positive price and volume action Here are the numbers for ITRI. Revenues came in at $603.4 million. The expectation was $579.6 million. So that was a beat of about $24 million, which was, I don't know, maybe about 4% beat on the top line. Bottom line, though, 124 versus 85 cents, $1.24 versus 85 cents. That's almost 50% higher than expected. And if you want to know what really resets market valuations faster than anything, it's beating your estimates by a mile. And then what happens is analysts start to raise guidance. They start to raise estimates, I should say. Management sometimes comes through and raises guidance. But that's something we can be looking for down the road. The AD line on ITRI was nothing really to write home about. I mean, we had been going up and going sideways on the AD. But notice these last 2 days, we saw a big surge in that AD line. I think there's a lot of accumulation that took place at the end of last week in the stock. And you can see relative to the electronic equipment index, set a new 52-week high. So ITRI looking really strong. In fact, these 5 charts are 5 companies that I would absolutely keep on a watch list, looking for pullbacks back to key areas of support for a better reward to risk entry. I want to mention on Tuesday, we are having a webinar. I like to do these Mythbuster webinars. If you followed me for a long time, you know I love to tear apart anything that Wall Street's trying to build. A lot of the stories that they try to tell us, many of them, in my opinion, I don't know if it's intentional or not, but they are not true. You got a lot of folks that just pick up on things and just throw it out there like they've been doing research all their lives. Go away in May is one of those things everyone likes to talk about. I mean, it's a catchy slogan, right? Go away in May. Why wouldn't you with that kind of a slogan? I mean, it rhymes and everything. Well, I'm telling you, don't go away in May. And I'm going to talk about why on Tuesday. It will start at 4:30. That's Tuesday, May 7th, 4:30 Eastern, that is, for those of you that live at different parts around the world. But all you have to do is just be a trial member. So even if you're not a member right now at Earnings Beats, you can start a trial. You can click on this link and actually register through this link and start your 30-day trial. It's completely free. We will reach out to you before your 30-day trial is up. So we will let you know before you're going to, recurring charge is going to hit your credit card statement. We don't want you to be a member if you're not interested in being a member. It's that simple. But this is an opportunity to kind of see us in action. I'm going to take a look at the overall market, maybe look at what I was predicting back at the beginning of the year. And I've been pretty close again in terms of market direction. But I'm going to take a look at what I talked about at the beginning of the year, where I see things right now, and give you any adjustments that I see based on current action, give you adjustments for the balance of the year. But I think you'll find it very, very interesting. The other thing is I will be talking about a specific earnings-related trading strategy that I use, that I talked about in our live trading room last Wednesday. I provided 2 stocks that met the criteria. Both of them ended up making money for me and for members. And so anyhow, if you want to learn more about that trading strategy, about the market in general, and about why you should ignore the go away in May, once again, make sure you join me on Tuesday. Would love to have you. Love to see you there. Anyhow, that is your Fab 5 for this weekend. Have a great rest of your weekend, folks. Happy trading.